for more on Germany's austerity moves and how they might apply to the U.S., we're joined now by Axel Merk. He's president of Merk Investments. He foresaw both the credit and housing crises, and his firm's currency-focused mutual funds total $500 million in assets under management. Axel, thank you so much for joining us. And Axel, by the way, is in Northern California, Mountain View, Palo Alto, California. First of all, I want to bring up some economic data that we actually got out of Germany today, manufacturing data that was disappointing. So what are the risks associated with the aggressive cutting that Germany has been doing?
Well, hi. First of all, the disappointing numbers today were just a blip after a series of very much encouraging numbers. Unemployment rate is down sharply in Germany, is reaching levels not seen since the early 90s. The weak euro has greatly helped Germany as an exporter. You had Obama on earlier talking about the U.S. exporting. Well, look at Germany, how they achieve it. Germany is really endorsing the austerity measures to regain credibility for the Eurozone as a whole. And they're taking the lead, and the rest of the world is watching. One of the main reasons why the euro has rebounded is because there's credibility behind the plans, and it's very important that Germany follows through with these things. And Krugman, he can move to Japan and see how well they have worked these spending measures. He's, in my view, very responsible in what he's promoting. Germany is taking the right lead. Europe knows it cannot outgrow its problems. It needs to save, not by raising taxes, but by cutting spending.
So let's bring this lesson then to the U.S. I mean, what if the stimulus is not renewed? What if there's cutting in addition to that? What if taxes go up, for example? I mean, what is this going to do to the recovery, which already seems to be sputtering here?
Well, the important thing here is not whether we have economic growth today or tomorrow. The important thing is whether we have A, credibility in the plans, and B, whether we allow the market forces to play out. Remember, we have not allowed the credit contraction to run its course. We're keeping home prices artificially high. We're keeping a lot of employment artificially high. And so it is very expensive to pursue the policy. And of course, if we let that go, we'll have a slump. But the problem is that we need to set something in course where people can trust that over time we will get our deficits in order. If not, we'll end up like Greece. And it's unlikely we'll go that far, but it doesn't look like there's any will to address these issues now. And at some point, this massive debt burden is going to come back to haunt us.
Well,
one of the things I've argued is...
Axel, everybody keeps talking about that. I mean, when is that going to happen, though? I mean, our debt issues right now are nowhere near the magnitude of a Greece. So, I mean, how impending is this disaster that you speak of?
When is the housing boom is going to be a problem? When is Greeks' finance going to be a problem? These things are not a problem until they are. The U.S. is running a budget as if they had an adjustable rate mortgage. Almost all of the debt is in a very short end of the yield curve. If interest rates go up, if foreigners demand more compensation for the interest, something can go wrong. We've argued for a long time, we don't have a Greek problem, a Southern European problem. We have a global sovereign debt problem, and the market is just waiting to find the next crisis. That can be in the UK, in Japan, in the U.S., in municipal sector, for example. And we need to tackle these issues and be prepared for them.
Axel, 10 seconds. What does this mean for the dollar and euro?
Well, the U.S. will have to do the heavy lifting, print and spend more money than the rest of the world. That means the U.S. dollar should weaken, and the Eurozone, having been battered, might be a very good place to diversify too.
All right. Thank you so much, Axel Merk of Merk Investments. He's the president of his firm and invests in currency funds. And coming up next,